All right, guys, we'll get started. Morning, happy Monday. We'll do a quick little broad market outlook, and we'll go over a couple top ideas. Again, if you have anything you want to go over, and you want to post it in this little chat in here, Heaven will call them out, and we'll take it from there. So again, this kicked off. Again, we have the SPY in this 12% range. We have major support at 420 and all-time high resistance at 480. We're near, we kind of bottomed out earlier last week. And for now, it seems like we're kind of in place for a little bit of a short-term bounce given the reaction we've seen off these lows. Now, in time, could we expect to see 420 again? It's probably very likely that could happen. But in the short term, given this extended down move, we kind of have to expect some type of snapback, at least like 50% into this range. So even like a bounce to like 460 is probably pretty realistic in the short term. Going into some sectors, the consumer discretionary sector, VCR, is probably one that's kind of setting up the best for one of those little snapbacks where it isn't too far off its major support, or we're not chasing it. Like first, and we'll get some of the sector later, we don't have to buy it up here, where it's much harder to initiate that position when you have to give it versus that major, or most recent area of support, where now we saw, this was the low, we saw it retest, we saw the buyers kind of step back in. So we have that double bottom forming, very short-term double bottom, but one nonetheless that's still forming. So if we can trade off of that, we can buy up through 300 versus 285, and you can kind of catch that bounce into this 320, 330 area. It's a nice 10% move on, 3 or 4% risk, broadly in this sector. We saw the REITs kind of pull back a little bit, but they still held their major support. We saw this has been holding for the last, few months now, this $100 area, which is, pretty significant. So given some of the other sectors that have gotten beat up, this one is still kind of holding up in that flag where you can kind of still trade it versus that 100. But like this example compared to, say, consumer discretionaries, is you have to, if you're buying it up through 107 here, it's much harder to initiate that 107 buy versus 100 because it's higher up off its support than like VCR, where you can still kind of sneak in up to 300, where the rest is a little bit tighter. And we kind of saw the same thing with, in the large caps, we were expecting, a shakeout through this area. It didn't really shake out much. The buyers kind of came right back. But earlier in the week, we were talking about kind of buying up to that 340. And this is kind of that same principle where when the names or the sectors or the markets look the absolute worst, into these correction territories, looking for those tighter buys on the way back up, you can get, very tight risk reward there. But when you wait and you wait a couple of days for that confirmation, buying it, 10 points higher makes it a much different trade where you're, in this case, you're buying up to 340 versus 330, it's 3% risk, where waiting for that to really form and now having to buy at 340, it's more obvious, but, the buyback is more obvious, but the risk, coincides with that. Same thing with the IWM, we were expecting that shakeout. It kind of got right down there and, snap right back. And same thing, very low risk buybacks where, you can risk a few percent down here buying on the way up versus those prior lows. And you can kind of catch those move, maybe we get a bounce into the 200-day, which same thing, we're kind of risking 2 to 3% here and looking for like those 10% bounces. The financial is very similar to the REITs, still in this flag, it still held its prior pivot, which was, pretty important, but still in a pretty significant, 10% range, with the overall market. We got the industrials, very similar with like the small caps. We saw a little shakeout, kind of bounce right back. And this is one, too, where you can still get in, for me personally, I look to buy through 188 versus that low, for that little snapback kind of into the 200-day. I'm not really expecting this to just run right back to highs, but if we can get that little snapback to the 200-day, that would be kind of a realistic bounce that we might be able to see out of the market. And then lastly, with energy, just continue to, trend higher. This is one that, was in the doghouse for pretty much all 2020 and started to work its way out in 2021. And for now, it's just in that breakout stage. If you're in any of those energy names, it's probably going to be easier just to hold it while it, continues to work its way back to, its prior highs. Individual name wise, I don't have too much. The only one I'm really keeping an eye on is PAYC. It does have earnings, I believe, later this week, maybe actually next week. But this was one, it came back to its major support, and we would expect, pretty hard breakout through that area. It really just didn't get that, barely tickling that, 300 psychological area. And now it's in this, 10, 12% range where, if it reports earnings and this downtrend is over and we get a little gap up and it can gap up to 340, that could be a potential spot to look to initiate a position. So again, not really much on the stock side that I can really find, scanning most of the major markets right now. It's still a lot of names just kind of on that, shake out to their new lows and trying to form new patterns. But Kusha did have a couple of charts he wanted to go over that he couldn't make on the call today. So we'll go over those right now, and then we'll go into anybody else that has any ideas. So he was looking at this DTE up through 101. Again, it's a utility name, so you want to just be aware that it's going to be a little bit lower beta. But this is kind of one where, definitely see what he's looking at, the 101, 102 area, but it's just going to be tough buying this name, fourth day up, versus 114. If this gets up here and then can consolidate, in this range for, a couple days or a couple weeks, would probably look like a much better entry than trying to initiate, the fourth or fifth day up. Procter & Gamble was another one. He's looking through this 161, which same thing. I can, definitely, we can see the flag he's looking at. We can see the area of support here versus 156. But really this flag, you especially with a name like PG, it's not going to just, break this 165 and just run. It's a little bit of a slower name other than the breakout it's been on, where you're probably better off just waiting for that 166 in time and letting this flag develop for the next few weeks or a few months or however long it's going to take. ECG or ECPG, nice little wedge. This looks like a nice little shorter term trade. He's looking to buy it up through 66 for 64. Just beware or be ready to take some profits into 68 if they're, if some sellers are sitting there and want to hold it down. But this other looks good for more of a shorter term swing. CF, I believe he's looking to buy it through 72. This is another one you probably just let it develop through that 74 and just give it some time before looking to kind of get into it just yet. And then two other ones to keep on the radar. We have this X-ray up through this 54 versus 52, just tight little pattern forming where you kind of take the trade up into this 58 area, kind of 3-1. And this AMD again, we want to remember with these names when they have these crazy moves. AMD was up almost 60% in 3 months, and when it's up here, it's very hard to think it's going to come back to this, the prior prices it was at. And you can see very quickly how it does get back. And these are just those reminders when you do have these big winners and you're up 30, 40, 50% or more, you do want to take some profits in them, because when they do come back, you're not going to want to be selling this thing down at 125 on the way down when you're up, 50 or 60% in the 160s. So just these, recurring lessons that we just tend to forget when we have the name and it looks like this and it's up near highs, where if we just continue to trail those pivot lows and respect them, we can take and squeeze much of that, most of that swing out of it before it does start to turn. So those are, again, the main things I want to go over. I see, Lincoln, you mentioned Hess. You mentioned a monthly basis forming, so I'll put the monthly chart up. Okay. All right, so Lincoln, what's the game plan for this Hess trade?
Something like this, it needs a little more time on the daily, but ideally buying through these highs and really giving it that proper amount of time for sure. But it needs more time on the daily, but something I'm definitely keeping an eye on.
Yeah. I mean, again, the energy sector is probably one of the only ones right now that hasn't really cared about the market's pullback. It's just kind of been on that, it's finally starting to wake up a bit. So it's definitely a place to look for, for opportunities. And this test is actually pretty surprising, because a lot of the other energy, like Exxon, it's like, it'd be very hard for you to initiate, any type of entry if you weren't kind of buying up through this 66, 64 area, where here just super extended, where this Hess is still kind of in this range. It's not, too extended. It, this 200 days still been acting as support. So for a sector that has been pretty strong, this seems like one that could make some sense to definitely look at anywhere. CVX and Exxon, both are two that they just seem very extended in the short term to try to get into something up here where that still looks pretty good. And let's see. So I mean, you'd obviously expect some sellers, up in this 103 area, 104, 110, 130 in those spots. But again, we're talking 30% higher. So definitely a good chart on the daily, but like you said, probably needs to set up a little bit tighter in the interim. All right. Anyone else have anything they want to go over? All right. I think that's it.
Oh, it looks like did you cover this VRNT by Eric? He just posted 3. So buzzer beater right there. Eric posted VRNT cup and handle in time. So still working on that handle part.
Yeah.
But
So,
then we got VMC support buyback 190, 192 area or sneaky buyback.
Yeah, I like this thing.
Yeah. And then last one's STZ 240, also support buyback. So I think once it can kind of make that same pattern that VMC made, I think it look a lot better because this still looks like it could go lower.
Yeah. Yeah. And I feel like for Eric, he's like waiting for them. He's like waiting just to buy, like, when he gets back.
Time. It's all in time here. So I have I'm mostly just watching stuff that's on earnings this week. I think it's going to move the market a lot. We have Amazon, Facebook, AMD, PayPal, UPS, just huge names reporting this week. So, and the market itself is just kind of at this inflection point where this could be the bottom and it just starts to move back up to 480. The 50% retracement between that 480 and 420 is 450. So that's like the key level I'm watching to see, do we just reject right there at the 50% retracement and then head lower? Do we consolidate and then head higher? So that's going to be really telling right there. I think that's like where we'll find our first major telling point.
Yeah. All right. See, next we got Alex. He's looking at A.
Yeah.
Up through 39.
Mm-hmm.
Yeah, obviously. So I feel like the main thing with a lot of these little support buybacks that are off of lows, I would just be much lighter than you would think, just overall. Just because, again, if you do get this, it's always like a lowering where you can like buy the bottom and expect it to just kind of run back to highs. But it's like the 1 of 10 times it does that, and the other 9 times you get these kind of little bounces, and you can take the profits into them. But you're not going to, you don't want to expect this thing to go back to this 180. So just with any of these support buybacks and the names that haven't really beat up, just take them with half the position you were thinking of taking them, so you can properly give them that room versus those, those real lows. He's also looking at AAP. 130, up through 230.
Looks more like a short.
I mean, as long as you're giving it versus at 220, and you get down through 220, probably could be a short, but you just want to respect that out for the first day or two. And if you get that buy up through, if you do take it through 230 and you don't get much follow through and it's not really taking out this 233 area like pretty quickly, I would have I wouldn't be surprised. I wouldn't be so gung ho and keeping it 220. Like if it just bounces and it, we can see that the sellers are still in this 233 area, it starts to come back down. These are not trades that it's like worth to like really respect the out. If you're expecting this break and this break off of support with some volume and some strength, and you're not seeing it by the end of the day, and it's starting to just kind of mess around and just not do much, there's no reason to say I have to trade it and give it first at 220. There's no reason why you can't just kind of take the shot. Okay, didn't really close strong. and you can, walk away with a tinier loss or break even.
Next one he's got is ABNB.
Yeah. It's just, Alex, you got like 5 for 5 on all tickers with A's.
He's just going alphabetical order.
Yeah, there's all the straight A's on the board. Is Abby's just tough because it just, like you said, more sideways. It just, this is kind of what I'm saying where like with the broader market, it's hard to just buy like that perfect area of resistance off support because it can be just so extended. Where this is just another one where it's like, this is like the easiest buy. And like this 132, like buying up through here was like a much harder buy. And that's where you were rewarded. Like you were rewarded when everyone was kind of shitting their pants and you were buying on the way back up. Where here it's very, and I know you're trying to buy it when it sets up more, but just as an example, this is the easy buy and this is not the buy that we get rewarded for in this type of kind of back and forth action type of market. Next, Airbnb. $146.
I would wait on this one.
Yeah. With yes, I would definitely just give it some time. This is one where it's like you don't really want to wait for like 152, and it's probably not going to go there this week anyways. But this is probably going to be the range in, and this reminds me almost like PAYC, where I try to get into it too early, like over here, and I try to sneak in instead of waiting for the 440. I tried to buy in up through, I think it was a 430 right here, and I obviously got stopped out. I lost like 4 or 5%, and this was just one of those ones where had I just waited for 440, I would have just entirely avoided this loss here. And this seems like this Airbnb, it's like it's probably not going to break this 153 this week anyways. And to sneak in by the couple dollars, you're better off just waiting. Like this is even over here. It's like you finally got that real significant break through this 154 area. All in here was just like it wasn't ready yet. It just was kind of chopping around, and we should kind of expect this kind of action with a lot of names going forward, given the breakdowns they've had. A lot of the names right now are in this type of move. Like they're all breaking down. They all look like these amazing deals near lows. And we expect this type of move to happen like as soon as we get in, where in reality, they're probably going to do this for the next few months and chop around and come back to lows and look like the world's ending and come right back. And that's kind of that base we need to expect with a lot of these names. And you can see where you had, Airbnb base for nearly a quarter before it really had that next leg. And that's just with a lot of these names that we just have to kind of let them develop and just wait for those proper spots, even if they are a little bit higher, to just avoid getting into them kind of prematurely. Let's see, Amazon 220. Yeah, so like this 2900 was support, now it's like resistance. If you're going to trade it versus 2700, I see what you're looking at, but I would just wait until after earnings. I don't think there's really much of a need to kind of jump in early when either this is going back into 2000 or it'll be back up in this flag, and that's the coin flip of earnings. So that probably I would just hold off on. CTAS 388, 390 versus 370. Definitely see you're looking at there. Earnings aren't until quite some time in earnings, so it's stuff that looks worth a shot. You just want to be aware of this 200-day is now going to start acting as resistance, so you do kind of have that in front of you, where at this whole time this was acting as support. So just be aware of that. CWH. So anytime I see when someone wants a short or long, it just kind of, I get from the chart aspect of, you're going to trade either way, but if the conviction is kind of either going to short it or buy it, I feel like 9 times out of 10, those are probably just easier trades to avoid when it's the either or. You're not going to really have the conviction in the trade that you probably should have. Etsy 154. So this is one even for myself. Again, you can see like the little circles of where, I was buying this 170, taking some profits on the way down. And, now looking at it, I'm, glad that I took those profits into the retest that prior all-time high. And then as it broke back down, because it completely reversed that move. And this is like that AMD, goes up, nearly 100% and completely reverses that move that much quicker. And if we take those profits, those highs, we get rewarded and we're able to kind of buy back here. So for me, like I would be with you adding up through, that 155 area, 160 area, 170, but that's because I'm in this name and I would hold it because I'm buying it on M1 and waiting for 300, where from a shorter term swing, it might be a little bit more difficult because it is just in this breakdown and it hasn't really based out just yet. So just want to be aware of that. Let's see, FITB. See 46. And so again, the financials have been pretty strong relative to most of the sectors. And this is kind of what I was talking about, like just waiting for that proper spot where someone might say I can buy 45, but waiting for 46, I think makes more sense because it might not go this week and it might have to still set up for some time. And then you'll just get that confirmation of that, sneaky buyback when it's ready. And hopefully the 200 continues to, drift higher and act, as support. So definitely looks good. This last one we have is LIN up to 318. Yeah, so definitely see what you're looking at. The only tricky part is, this could easily get up there like right off the open today and easily just tickle 318, go to 320 and come right back down to 305 and be completely fine. As we kind of saw, I guess this was like Wednesday, where it just opens up at that area, completely sells off, and it's nothing out of the norm, but just regular trading for the name right now. So this might be one that if it can get a little bit tighter, you can really buy up through 320, say verse 310, and not have to give it this 15 points. Probably makes a little bit more sense maybe later on than this week or today, for example. So I think we're good unless anyone has any last idea. I think we'll be good on this little Monday morning call.
We good.
All right, guys. Good luck in the markets this week. And any questions you have, post them in the chat. And talk to you guys in the open chat.
Thanks, man.
All right. See you guys.